Hello, everyone. Today we are looking at a real old-school giant on the NSE, Goodyear India Ltd. If you've been tracking the automotive space, you know tires are the backbone of the whole industry. Goodyear isn't just any brand, it's a household name that has been around for decades. In this video, we will do a proper post-mortem of the stock. Whether you are a long-term investor looking for steady dividends or a swing trader eyeing a breakout, we have all the masala here. We will talk about their market standing, the financials, and if this stock actually has the dum to beat the benchmark indices. So let's get started and see what the scene is with Goodyear India. Basically, Goodyear India has a very unique position. While others are fighting tooth and nail in the two-wheeler segment, Goodyear is a big daddy in the farm tire category. They provide tires for tractors that power our agricultural sector, which is the real engine of Bharat. Apart from that, they have a solid presence in the passenger car segment as well. They operate a massive plant in Balabgarh and have a very tight distribution network across the country. Their parentage is top-notch, being a subsidiary of the US-based Goodyear Tire and Rubber Company. This gives them a huge advantage in terms of R&D and tech transfer. It's not just a local player, it has global Shakti behind it. Now, let's talk numbers, because at the end of the day, paisa bolta hai. Goodyear's financials are quite steady, though they have seen some pressure lately due to raw material costs. We are looking at an annual revenue in the range of 2,500 to 3,000 crores. Their EBITDA margins have been a bit of a seesaw because of natural rubber prices, which are very volatile. But the best part? The company is virtually debt-free. In this high-interest environment, having zero debt is a huge blessing. Their return on equity is decent, but investors are waiting to see if they can scale up the top line in the coming quarters. It's a very conservative, Khandani style of management. If you are a dividend lover, Goodyear India is like a jackpot for you. They are famous for their fat dividend payouts. Just look at the history. They have given special dividends that made the yield go through the roof. For many retail investors, this is the main attraction. While the stock price might stay sideways for a long time, the dividends keep the bank account happy. It's like a fixed deposit, but with the potential of capital appreciation. But one thing to note, they pay out a huge chunk of their profits, which means they aren't reinvesting heavily into massive expansions. It's a classic cash cow scenario. If you want regular income, this is cent per cent worth looking at. Looking at the charts, Goodyear India has been a bit of a slow mover compared to the bullet train stocks of the current bull market. It stays in a range for a long time. Currently, the stock is trading near its support levels. If you see the 52-week high, it has quite a bit of ground to cover. The volumes are generally low because it's a low-float stock. Promoters hold a massive 74% stake, which is the maximum limit as per SEBI. This means there isn't much mall available for the public, which can lead to sharp moves if a big fund enters. Keep a track of the 200-day moving average. That's where the real action happens. Let's do a quick SWOT to understand the scene clearly. Strength is definitely the brand and the debt-free status. Weakness is the high dependence on the tractor segment. If the monsoon is bad, Goodyear feels the pinch. Opportunity lies in the government's focus on infrastructure and the scrappage policy, which will push tire replacements. The big threat? Competition. You have players like MRF, Apollo, and SWOT who are spending like crazy on marketing and expanding their capacities. Also, if crude oil prices shoot up, synthetic rubber gets expensive, and that hits the bottom line directly. It's a tough playground, but Goodyear has a solid defense. The Indian tire industry is currently in a very interesting phase. With the Make in India push, local manufacturing is getting a huge boost. The CV, or commercial vehicle cycle, is also looking up. For Goodyear, the rural economy's recovery is the key. If the rural folks have more money in their pockets, tractor sales go up and Goodyear's cash registers start ringing. Also, keep an eye on the EV transition. While it's early days for tractors, the passenger car tire segment is already evolving. Goodyear needs to bring in their global EV tire tech to India quickly to stay relevant. It's not a sprint, it's a marathon, and the company is well prepared for it. So, what is the final verdict? Basically, Goodyear India is for the safe investor. If you are looking for a multi-bagger that will double your money in 6 months, this is probably not it. But if you want a stable, blue-chip-like company that pays great dividends and has a rock-solid balance sheet, then it's a great addition to your portfolio. Kindly do your own research or consult your financial advisor before putting in your hard-earned money. The stock looks good for a long-term hold, especially at current valuations. That's the scene for today. If you liked this analysis, please hit the like button and subscribe for more Pace of Asul insights. Cheers!